morning to everyone. We are here today for our special 20 minutes coffee, and special because we're going to talk specifically on AI data centers, so digital infrastructure, with usually my co-host, let's say, Jose Ivan Garcia, that is the chairman of SubgenAI. And today we have a very special guest that we bring all the quarters, friends, colleagues, top tier expert. And today I'm very happy because I have Andrew with me, Angeli, that is the head of research and strategy for real estate, specifically at Zurich Insurance. Very good morning, gentlemen. All good with you guys?
All good.
Fantastic.
Thanks for the invitation to be with you today.
Lovely. So today, for about 20 minutes, I prepared a little bit an agenda of talkings, discussions between us with specific focus on the real estate. Actually, that is there. With this question that I would like to begin, Andrew, a little bit broader. We are seeing a lot of movement on the macro side, and this is affecting the asset class. So far, there are concerns, in some cases optimisms, but there is not very much consensus for what I'm hearing on the overall real estate in Europe. What is your opinion? And I'd like to hear your view, and also what actually are the catalysts that are shaping the sectors so far and going forward.
Absolutely. Antonio, you're absolutely right in that it's been an eventful year. A lot of geopolitical uncertainties that have really taken attention and maybe prevented the recovery in real estate markets that many of us had hoped for. But with all of that said, let's remind ourselves that 2025 is shaping up to certainly be a better year in terms of deal activity and performance than the last couple of years. We've survived to 25, that common adage that we were talking about the last couple of years. Deal activity, it's still flat-ish over the last 3 years. But if you talk to brokers, they are commenting that they are seeing more pipeline coming to market, and there is some genuine optimism that the coming quarters should be better. Seller expectations certainly are becoming much more realistic, and that's a catalyst for improved deal volumes. In terms of the occupier side of the equation, a lack of supply means that rental growth is still coming through. We see that in Zurich Insurance's direct portfolio in many segments of the market. It's true in Europe. It's true globally. We're seeing rental growth come in ahead of inflation. And that means that performance, should be the best that it's been in 3 years. That's certainly a much healthier dynamic than we had been in the last couple of years. Again, maybe not as great as we all hoped at the beginning of the year, but also, frankly, not that bad.
Sounds good. But when we talk about private market, especially the real asset, overall, where do you see the most compelling story going forward, and why?
Yeah, so to me, it does come down to allocations. And by that, I mean from the period between 2014 to 2022, real estate took allocation from other asset classes. And that was a function of real assets broadly offering a yield advantage to traditional fixed income assets. And that thesis has certainly been shaken up in recent years. And so real estate generally is giving some of that allocation back. Who's taking it? Well, infrastructure is an obvious candidate. And as it links to data centers, which we'll talk about today, that is certainly a place where allocations and interest are focusing. For us, some of the allocation is also going to private debt, which has certainly been in the headlines recently. Private equity is also an important area for a group like us. But the point being is that real estate allocations are under pressure. And so those allocations that we and other institutional investors have, we need to be precious with how we deploy that capital. And I think that's going to be a theme that will kind of hang over the market, certainly over the medium term.
Indeed, very good points. The points that firstly was like the competitor or the competition was with the fixed income, and now instead you have the other sister and brothers of the private market side, let's call it this way. But you mentioned something very important, and the focus of our talking today is indeed digital infrastructure, data center. What actually is, in your view, the key to make this segment of the data center much more appealing? And do you think that the sustainability angle it's one that can help to give a better, let's say, light of them? And also another point, how is the weight of the value creation angle? That is very important. I'm pretty sure that also even since they are very strongly part of this segment, will bring his specific view on that. But please, Andrew, kick off.
So as it relates to data centers, if you look at investor intention surveys that have recently been released, or frankly, those have come out the last couple of years, the number one sector that institutional investors want to allocate to is digital infrastructure and data centers. And that's clearly because the space aligns with this digitization trend that we have all been talking about, and certainly the advent of AI, which is inescapable in our professional lives. Now, I would say, depending who you ask, AI may be the forerunner to the fourth industrial revolution, or maybe it's the largest market bubble in human history. Or if you want to take a particularly dystopian view of things, it could be the beginning of the apocalypse of humanity. I'm not going to assert a strong view on any of those, but it does go to show that this is a topic that is captivating hearts and minds, and certainly investor interest. Now, as it relates to us, and so I represent Zurich Insurance's direct real estate investments. And when we invest, we tend to invest for a longer holding period. And one of the catalysts for investing in markets is really understanding the return characteristics of a property type, the expectation of capital growth, the reliability of income. These are really important components in terms of how we think of real estate in a real asset context. And so to the question, what can the data center space do to make us more comfortable? Well, I guess it's twofold. One, it's to give us greater data, greater evidence of the performance characteristics of data centers over a long period of time, because that links to the other part of the equation. That helps us understand what an exit strategy looks like. Clearly, a lot of capital is going into data center development right now. The hyperscalers, are putting, something like over $300 billion into development just this year alone. And so that speaks to more interest of getting money into the market, into development, rather than considering what an exit strategy looks like. So again, how do we get more comfortable? More transactional evidence and more data to help us understand the characteristics of the data center property sector.
Ivan, you agree? You are part of the industry because you guys are very active in Spain in the sector. What's your view on that? How to make investors more comfortable, let's say, especially with greenfield project, no development side. Are you on mute? I think, Ivan.
Yes, I'm sorry. So first of all, Antonio, I would say that it's a pleasure to share the panel with Andrew. He has extensive experience on this topic, so much more than I have. My experience is from the business side per se, not as an investor, but what I see is that data centers become compelling when they unite bankability, that is to say, power secured, land controlled, permits in place, offtake contracted, these kind of things. Also, unit economics, so high densities, modular expansion, predictable workloads, all of that makes them appealing. And of course, sustainability, as you just said before, renewable energy via power purchase agreements, heat reuse, water-free cooling. That is to say, at the end of the day, lower financing costs. And that's, for me, and also a very important part when it comes to define a compelling data center. For us at Substrate and Subgen is the parent company. Substrate is the subsidiary that invests in data centers and is creating its own stack of data centers. In this case, what we do is AI-ready design plus ESG telemetry, that is to say analytics, traceability, and audit trails for energy use, emissions and compliance, these kind of things, plus renewable strategy. So all of that together, for me, it's key. And as for sustainability per se, in my opinion, is no longer cosmetic. It is now an economic accelerator, in my opinion, given the present situation.
That's absolutely fine. On the other side, I think that since now it's becoming mainstream, right? Because everyone is talking about data center, but it's a very brand new. It's just a couple of years, let's say, a few years that is going on. So I think that also, as Andrew mentioned, we need the market, needs a much more reliable data to compare with the other one. So I'm pretty sure that going forward, this is what is going to be like one things on the industry side needs to be done, and to make a much more comfortable, let's say, different kind of investor side. But Angel, I want to come back to you on the value creation. Where do you think actually that we can find the value of this segment, this asset class on overall? No, you guys, you are a player that for you real estate means, as you mentioned, not just, sorry, you have different kind of segmentation. You have the residential, you have the offices, you have the industrial side. So each of them, when you analyze, you need to understand the pro and cons. So on this specific topic, I would like to hear your specific point of view.
So I think the question really is one of cost of capital and what are data centers and where do they sit within a multi-asset class investment portfolio. And I would say, over the last year, I've built the view that for us, real data centers really don't belong in a all equity core long-term real estate portfolio. For that, we're very comfortable with traditional real estate classes like offices and residential, where the majority of our portfolio is. Now, that doesn't mean we don't like data centers or we don't get it or that we're that we don't understand AI. Far from it. But we have other ways of accessing the thematic. And some of those routes of access are lower cost of capital and with shorter term investment horizons. So for us, an interesting way to access the space may be through private credit, providing development finance to a data center developer. or, in the private equity space, and we have done investments with energy providers to data centers. And that's also an interesting thematic, because as we know, data centers are so power hungry. If you can solve the power equation, you can access data centers without actually being in the physical asset data center. And then finally, the other route of access, and we do this in Asia Pacific, is through REITs, so listed vehicles. And that's an elegant solution for us as well, because if you are skeptical of the exit strategy and you are potentially worried of over enthusiasm of the amount of capital going into data centers, you may like REITs because you may be able to get your liquidity much quicker. That space is growing quite significantly. There are some big household names in the space that enable you to get access to the theme quickly, and then potentially get out if necessary.
Indeed, I think the liquidity angle is one of the big issues, especially when the asset class, I guess, it's still not very mature. So you don't have enough data. So also the investment trust, the REIT side, I think it's a very interesting angle indeed. You mentioned also another risk side, that is the energy, the consumption side. And we know that this is like a big concern when we talk about data center, because of this consumption they're going to need of electricity. I want to go back to Ivan and talk specifically on, you mentioned quite a few risks, behind, you have the regulation, you have like the administrative side, permits and so on, you have supply chain, you have crafted labor, you have the infrastructure, such as the transmission lines, grid. I would like to, can you give an idea what's going on right now? What is the actual situation in Europe, and specifically now in Spain, because it's the market that you guys are very active on?
Yeah, in Spain in particular, it's it has strong renewables, and that's a good one. Also, it has a receptive region, so that's part of the things that we are discovering. There are some regions here in Spain that they are very committed to these kind of investments, and but the point is that we need to be careful with the grid strategy, because that's the main concern in Spain and everywhere actually. Indeed, but in Spain in particular, the grid constraints are very important. Long timelines, limited available capacity. So in order to secure power, that's the most, the biggest risk when it comes to invest in a data center. No? Of course, the permit delays as well, environmental or municipal processes, depending on the region as well. Supply chain and labor, as you said, specialist equipment or skilled workforce shortages. So that's also part of the problem when it comes to operate a data center. And what we try to do in Substrate is to mitigate these risks through modular design, dual sourcing, and proactive grid engagement. But anyways, we need to make sure, everyone that is interested in this business or these investments, these kind of risks are there, and we need to fight them. As you know, with all our capacities, to make sure that the investment is a productive investment, because we have secured and eliminate or try to reduce as much as we can the risks attached to this investment.
Indeed. So we heard the driver in few hour chat before, the driver behind this big boom of data center. We know that is very much the AI angle, so the technology side that is a huge, it continue, I guess, to be very much like that. But Andrew, we spoke a little bit on the major risks, on few of them. Now you mentioned about the liquidity, especially that this is something that catches a lot of my attention. Then we have this, let's say, call it the back office risks, such as permits, such as when we're talking about the other ones, that are much more linked to the real asset, the real estate in C. Do you see other major risks behind that as very important when you have your DD checklist?
So I'd come up with two in addition to what's been said, and it does link to the advent of AI and the question of whether we're in a bubble and what a deflating of that bubble looks like. If you look at some of the largest tech listed companies, a lot of their valuation, a lot of their performance year to date has been underpinned by AI hope. And from my perspective, it doesn't take much for that to wobble a little bit before enthusiasm in AI knocks onto the data center space generally. So I think that's certainly a big one, and there are very strong opinions on both sides of that debate. The other piece, and this is going in a completely different direction, is the sustainability angle. And so for us, we have very aggressive decarbonization goals with our real estate portfolio. And that, specifically relates to scope 1 and scope 2 emissions, but we are definitely keeping an eye on scope 3 as well. So what that means is an investment in a data center potentially takes us in the wrong direction as it relates to our carbon intensity aspirations for the portfolio, and that's a real challenge, because we clearly, as an insurance company, see the effects of climate change, and we are incredibly minded to do our part in trying to help the climate situation. But this is where data centers and energy consumption are certainly at odds with this very interesting and powerful investment theme. So again, it's another reason why we're looking at the sector from a direct real estate investment perspective with a degree of skepticism.
I'm pretty sure that even his team is taking a lot of notes, because those are very huge learnings that, of course, on the development side, on the player that is from the industry, are huge important to mitigate and to improve, no? Yeah. Because we learn by exchanging in talking of a level like this one, where we have like the LP side, the investment side, the industry side, the advisory side, and so on. But I was very sure that actually the outcome of this over 20 minutes coffee that we had today had to be like so juicy, like it was. Thank you very much, both of you guys, for exchanging so much knowledge, so much insights with us. And see you to the next one.
Thank you, Antonio. Thank you.
Bye. Have a good day. Bye, Ivan.
My pleasure, guys. My pleasure.